Hi everybody, I'm Steve Hall and I'm an investigative reporter, and in today's segment I'm going to help everybody understand the mortgage modification trap so they can stay out of it, or if they're in it, they can do as little as damage as possible. I see so many people today struggling in this economy and working harder than ever before for less. And lots of people are trying to save their house and get a mortgage modification and end up spending many months and lots of money doing all the right things and still losing their house. Before I get into the details, I want you to know I have personally felt this pain. A few years ago, I worked for a multinational corporation I would love to name, and I was let go on December 1st with 2 weeks of severance pay after years in that position despite being the top guy in a two-state area. To make a long story short, I ended up getting a divorce after 25 years of marriage and lost my family and house. I was confused and frustrated. How can this happen to me? I worked hard and I did all the right things. As a result of that experience, I wanted to know why the economy crashed and ruined my life and the lives of people around me. I started digging. And if you stay with me, you will see what I found out. If you're experiencing any of these problems, I'm here to tell you it's not your fault. There are things going on behind the scenes that have led hardworking Americans to this place where you are working as hard and as smart as you know and feeling like you're losing ground every day, because you are. They set this up. In this series, I'll help you to understand what I found out about the mortgage and the banking industry and how you can do all the right things and still lose your house. If you know anybody struggling in this economy and trying to keep their most valuable assets, their family and their home, you have to know the rules of the game. And what I found out is they're not what you think they are. What people are starting to realize is that there are lots of hidden rules people don't know about. And that is why we have so much confusion. The last numbers I heard is there will be over 2 million people losing their homes to foreclosure this year alone. And that number is growing. How could this happen to the richest country in the world? It just doesn't make sense. So stay with me. I want to play you a clip from 60 Minutes that'll shed some light on the problem and the solution.
When it comes to bailouts of American business, Barney Frank and the Congress may be just getting started. Nearly $2 trillion tax dollars have been shoveled into the hole that Wall Street dug, and people wonder, where's the bottom? It turns out the abyss is deeper than most people think, because there is a second mortgage shock heading for the economy. In the executive suites of Wall Street and Washington, you're beginning to hear alarm about a new wave of mortgages with strange names that are about to become all too familiar. If you thought subprimes were insanely reckless, wait till you hear what's coming.
Home loans from hell.
All these fees are racking up and none of it made sense. And in the end result, I might be moving out of my home, getting foreclosed on, which could damage my business, which ultimately could ruin me.
A government program designed to help homeowners instead may be helping banks make money while driving some borrowers into foreclosure.
May be wrong, but I think most people have the feeling, well, if a home goes into foreclosure, everybody loses. What you're telling me is the bank often makes a lot of money.
Yeah, the servicer, the entity that's actually collecting the payments, does not lose money in a foreclosure.
And once the American dream, is it still a wise investment?
It's no longer a matter of, let me get in the biggest McMansion I can possibly finance. It's a matter of saying, what do I need to live, and I'll invest elsewhere.
We'll bring you the news tonight on Dan Rather Reports.
Good evening. By all accounts, America is facing a foreclosure tsunami. 14% of homeowners in this country are currently delinquent on their mortgages. By the end of this year, foreclosure notices will have been sent to nearly 3 million homes, and a second wave is predicted. You're going to hear a lot tonight about servicers. It's a word that is used in the mortgage industry to describe where you send your mortgage payment. Wells Fargo is a servicer, as is Bank of America, for example. But servicer has taken on a whole new meaning to homeowners who are in trouble. The country's largest mortgage servicers have been battered in the headlines and on Capitol Hill for allegations of robo-signing and using fraudulent documents to foreclose on homeowners. But that could be just the tip of the proverbial iceberg with the servicing industry. A little reported and little understood aspect to the foreclosure crisis, claim consumer advocates, is that foreclosure is in fact a lucrative profit center for the servicers who are making millions off a laundry list of fees. The banks who service home loans dispute this, but we've been talking to homeowners across the country who say their servicers pushed them into foreclosure instead of working with them to modify their loans.
I can't tell you how many times I pulled into my driveway that I honestly looked at my front door to see if that sticker was on my front door, to see if my house was going to be sold in a sheriff's auction.
Belinda Brooks is the mayor of Luckey, Ohio, a small town of about 1,500 residents just outside of Toledo.
Good. Well, trouble and double trouble.
But being mayor is only a part-time job.
See ya.
She's also a small business owner who moved here 9 years ago to get away from the big city.
Did you do all these January reports yourself?
When Brooks moved to Luckey, she fell in love with the community.
Let's get all your stuff ready.
I don't want to go to school.
Oh, yes you do. You like school?
Here, the mother of three found good schools and a low crime rate.
Oh, you're so big.
Her business is administering health plans for small companies.
Who's coming in 23 days?
Santa. Santa.
Oh, really? You think?
Yeah.
Do you?
But when the economy soured, her business started to slow.
Sammy, you want to slide through?
So Belinda Brooks did what she thought was the right thing. She began planning for the worst.
It was clear to me that the economy was taking a hit, so we were engaging and getting ready for less income. So I was just trying to make sure that I was ready for that so I wouldn't be in a bad situation down the road.
Brooks' mortgage payment was $1,500 a month. She tried to refinance, but she was underwater, meaning her home was worth less than the amount of the loan. But she heard of a new government program that promised to reduce the payments for 5 years just to keep homeowners in their homes and slow the national foreclosure bleeding. It's called the Home Affordable Modification Program, or HAMP. The government wanted banks, the same ones that had just been bailed out with taxpayer money, to return the favor and help homeowners like Belinda Brooks. But instead, many homeowners across the country say loan modifications have been a nightmare that's led them to financial ruin.
And in the end result, I might be moving out of my home, getting foreclosed on, which could damage my business, which ultimately could ruin me.
Belinda Brooks' story is similar to many we heard. But to understand what happened, you need a quick lesson in 21st century economics. Gone are the days of personal relationships between banker and borrower, as was depicted in the classic movie, It's a Wonderful Life.
Mr. and Mrs. Martini, welcome home.
Bread, that this house may never know hunger.
And wine, that joy and prosperity may reign forever. Enter the Martini Castle.
Today, there often is no relationship between the borrower and the lender. The banks that sold you the loan earned a fee for doing so, and then flipped it to Wall Street. Wall Street sliced and diced the loans and then sold them to investors around the world. Those investors own your loan, but the bank that sold you your mortgage is still in the picture, often serving as the middleman, collecting payments and deciding who and who does not get a modification. So the bank doesn't actually hold the paper.
That's right.
But it services the loan.
It services a loan, and you don't have any control over who services your loan.
According to Diane Thompson of the National Consumer Law Center, that is a problem when it comes to modifying loans.
And so you're going to be making your payments to somebody who really doesn't have any interest in seeing you perform on that loan.
When Congress wanted to know about loan modification programs, they called Diane Thompson to testify, and she spared the servicers no mercy.
Servicers do not believe that the rules that apply to everyone else apply to them. This lawless attitude, created in part by financial incentives and too often tolerated by regulators, is the root cause of the robo-signing scandal, the failure of HAMP, and the wrongful foreclosure of countless American families.
Thompson says there are three players in this drama: the homeowners who are losing their homes, the investors who are losing money on bad loans, and the banks or servicers who can actually make money off of foreclosures.
These abuses occur because servicers have strong financial incentives to deny permanent modifications and in many cases to proceed with foreclosure. The illegal fees that push many homeowners into foreclosure are profit centers for servicers.
And those servicers, Thompson told us, can do quite well, even when homeowners and investors are losing their shirts.
Maybe wrong, but I think most people have the feeling, well, if a home goes into foreclosure, everybody loses. What you're telling me is the bank often makes a lot of money.
Yeah, the servicer, the entity that's actually collecting the payments, does not lose money in a foreclosure. They get all of the fees that they've charged off the top in a foreclosure before anybody else does. So
And those fees add up.
Those fees can add up to thousands of dollars, and they get taken off the top in a foreclosure. So the servicer gets paid first before anybody else gets paid.
Back in Ohio, Belinda Brooks was making sure her house was in order. Worried that her income would be taking a hit with the souring economy, she submitted an application for a modified loan that would lower her monthly payment. Her servicer was Aurora Loan Services in Colorado. She told us that from the start, they said they kept losing her application.
They didn't have it. They lost it. Then I have to refax it. So this process went on for 7 months, and phone calls and phone calls and phone calls, to where it was maddening, really. It was just crazy.
After months and months of sending and resending her application, the mayor from Lucky was anything but. Aurora kept her in limbo until finally, she says, the servicer suggested something surprising.
They kept telling me if I were behind on my payments, I would be placed up higher on their preference and priority on getting placed into a modification program quicker. And I kept saying, well, I don't want to be late on my payments. That's, not the purpose of what I'm trying to do. And they just kept saying, hey, you need to miss.
Brooks says she finally decided she had no other option, so she purposely missed a payment.
And so when I did pay that month late, and then all of a sudden, poof, I got my trial modification, I was very, I want to say encouraged that, oh gosh, you know what, maybe that was it. Maybe I just needed to do that, because then I got my trial modification, and I thought maybe this will work out then.
The trial modification is the first step in HAMP, that federal loan modification program. Borrowers must show that they are able to make the adjusted payment on time for 3 months. Then they are put in a permanent modification. Mayor Brooks' modified mortgage payment dropped almost $400 a month.
Paid all 3 of them on time, perfectly on time.
But it didn't matter, because Brooks was in for another shock. While one banker was working to modify her loan, another, at the same time at the same loan company, was beginning the process of foreclosure. It's called a dual track.
Every time I was sending them my modified amount, it was not going to any of my principal. So every time I got a bill, nothing was registering or making sense. So it kept saying I owed. And when I called Aurora about that, they said, don't panic about that. We have to show it like that. Once you get into your modification, it'll go back to normal. All that will be included into your loan, and it will be remodified.
Brooks completed her trial period and waited for the bank to send her a permanent modification. When it didn't come, she called the bank to see how much her next payment should be.
It was right about that time in December when they changed my payments, and I got really, really nervous because I thought, this is just really strange. And then I got, in January, first week of January, they sent me a letter saying, we want you to send in all your paperwork again. You need to submit all your paperwork for a modification. I thought, are you kidding me? Do you know how many times I have sent this stuff in? You need me to send all of it again? These packets are like this thick.
It's set up so that if homeowner makes 3 trial payments under a modified loan, then they should be converted to permanent. But what's happened is that homeowners are pushed into trial plans that never convert. That's on him, though, isn't it?
He says what happened to Brooks happens thousands of times across the country. Borrowers told to miss payments. Paperwork lost over and over. and trial modification periods that go on and on.
You're supposed to convert at 3 months, but because they're not converting people at 3 months,